Hey guys, how's it going? Value Venture Investing here today. So today we're going to be talking about Irobot's Q4 2019. They also have their full year for 2019. If you guys haven't seen my other video where I give my reasons for why I wanted to buy Irobot stock, I'll put a link right up here. I'll also put a link in the description as well. So taking a look at the stock today, we finally seen a bit of a reaction after hours after they announced this yesterday. It was pretty flat. I think I know why. Today it was up almost 18%. We're nearing almost $60 per share here again. So today we're going to be talking about the results. They're giving their guidance going forward. There were also some very interesting things that came out of the conference call, and I'm going to let you guys know what my thoughts are on it and what I'm going to do. So let's get started. Let's make this relatively quick today. Revenue. So the estimate was a little over $414 million. So this is just for the quarter. $414.3 million. They came in at $426.8 million. So that was a significant beat right there, and a pretty big year-over-year increase as well. EPS was estimated about 42 cents per share. Keep in mind there's been a lot of concern about the tariffs, but we'll get into that later. And they actually released 70 cents per share. So pretty big beat right there, so we can see why the stock is responding the way that it is. I always like to include cash, especially with companies that aren't so incredibly massive. We have as of this last quarter here, about $256 million in cash, and they actually don't have that much debt. We'll take a look at that after, but that's something that I really like as well. So if you're wondering probably why the stock didn't respond much, I think it was the main reason was because the longtime CFO was leaving. They're having a transition plan in place, but I think anytime that happens, as you guys seen before with a company, you see a little bit of a reaction. People get concerned, especially with financials and stuff like that. But I don't think it's a big deal, and obviously today the market shrugged it off. Also during the conference call, they talked about a new Roomba model coming in 2020. Of course, as you guys know, if you watched my last video, I love Roomba, right? Like, I don't know how anybody survives without them. I leave the house and I let it clean, and then I come back, right? I wouldn't clean nearly as much if I didn't have the Roomba. And to see a new Roomba model coming in 2020, of course, personally, I'm excited about that because I want to see. But it's also an incremental revenue driver, which is something the company really needs to innovate right now because there's a lot of competition, even though they still, in my opinion, and a lot of the actual figures on their machines have the best machines out there, and of course the best brand recognition. But that's something that I was really surprised with, because we just saw the S9, the S9 Plus, some of the Bravas be updated last year. Of course, the Terra, I'm kind of, I don't know on this one exactly how well it's going to go, but of course they had the beta in 2019, and in 2020 they're saying they're going to have limited sales to ramp into 2021 being, I guess, the year they're going to go full scale in terms of production and sales. Of course, talking about incremental growth drivers, the Brava, if you don't know what the Brava is, that's basically their mopping and their, I don't think it's a scuba one, they used to have a scuba one, but basically the wet mopping. So after your Roomba vacuums, they mop. And I don't have one of those myself, and I don't know how successful it would be, but we saw growth of 28%, so that was something notable as well. One of the other bigger ones that kind of makes me wonder about what's going on a little bit in terms of how they're going to change the product is they're in a partnership now with If Then, If That. If you don't know what that is, that's an app where basically you can automate things, like, as the name implies, if this, then that. Works with a lot of different things, but they're talking about implementing it right into the Roomba app, and we've seen them do a lot more automation, right? Like, for example, like I just said to you guys there, when your Roomba is done vacuuming, it can send a message to your Brava to mop. So basically it can vacuum and mop when you're gone. However, one of the concerns I've had with Roomba is that they still use a camera-based system. I think they have potentially one of the best. The lidars are very good on the competition as well, but the lidars can do it in dark. And for example, when I'm leaving at night, I leave my Roomba to go, and the new ones, they're using camera, right? So we saw Dyson come up with recently here the solution of having a light on the top of it. I don't know how good that is. I was wondering if Roomba was going to maybe do a combination of the two. there's benefits and there's benefits and drawbacks to each of them. I think the camera based is better, just like when we're talking about Tesla. He thinks camera based machine learning is better, and I tend to agree. But if it's dark, what do you do? So they might be sticking with that, because one of the examples they gave in the conference call is saying basically after your room was done, it will turn the lights off. So you can leave the house, leave the lights on. It's built into the app, and it'll turn the lights off. But of course, you're going to need that smart lighting. However, people that are in this sector are kind of into that. For example, me, I have smart lights everywhere, so when I leave, they automatically go off. Love those too, but I mean, of course, they're still pretty gimmicky in terms of now, but that would solve my problem, right? You could just leave the lights on and they would stay on, and it was built within the app. It will shut them off when they're done. So that's just one example. So I really like how they're trying to build in artificial intelligence and these types of things, and that could be their competitive advantage and potentially give them a higher multiple, because they traded at a much higher multiple than what they're trading at right now. Of course, one thing that's always been on our mind is the tariffs. We'll take a look at this when we take a quick look at their financial statements. But they had $38 million in tariffs. So there's a lot of talk about cost cutting. I'm really happy to see them do that. They're transitioning again in 2020 more to Malaysia for the production. And they're saying within 2020 they want to have like a third reduction of the US in terms of their sales cost cutting, I believe is the way that I understood that. So we're seeing some companies transition out of China. However, I do not think these tariffs are going to be around forever. And that was one of the reasons that I bought the stock, and it's been doing pretty well so far. So going forward in terms of guidance, again, a pretty significant beat. The estimate for revenue, I think that looks a little weird, revenue there, sorry, is $1.31 billion. So that was the estimate for 2020. Of course, they gave the figures of about 1.32 to 1.35, way higher than that. I mean, even on the low end, it's still beating the estimate, and that's about 9 to 11% growth year over year. So these are pretty fantastic numbers, I think. In terms of EPS, which can be hampered, they're still saying they're expecting a 25% tariffs going forward. I don't know how long that's going to last into 2020, but we'll see. The estimate was about 93 cents per share. So it was kind of somewhere in line of what they're saying. They're saying anywhere from 55 cents to $1.15. So it was technically kind of a beat, cut by kind of midline, but there's a lot of uncertainty there with tariffs. So we're going to take a look right now at their financial statements. These ones aren't up on the Securities and Exchange Commission, but I think they're interesting to look in terms of the last 3 months and year over year, and then I'll give you guys my thoughts. So one thing to be aware of when you're looking at this, they're like I said, they're not up on the SEC yet, but on their website they do provide this information, but they're also showing GAAP and non-GAAP, and the reason that they're doing that, of course, is because they want to break out the tariff. So that's just something to keep in mind. I'm going to stay in line with GAAP. Taking a look at the income statement, let's first look at the quarter. So they say the 3 months ended, so this is for 2018 versus 2019. We saw very nice growth of revenue, over 426 million, almost 427 million, and versus last year we only saw about 385 million at that time. This area is also very interesting to look at. Obviously, this is where we're seeing the fact of the tariffs coming into a case. Total cost of revenue was $257 million, and look at that versus a year ago of $198 million. So that gave us gross profit of $169 million versus the $186 million. So basically a huge difference right there. Looking down below here in terms of their operating expenses, everything is pretty much in line. They've done, the general administrative, you've seen they've done a pretty significant cut there. But everything else is pretty much in line. So again, you look at their operating income as being almost halved, if you will, from a year ago, and going down to the bottom line, net income was about $5 million less. So we're at about $20 million for the last quarter. And again, as we said, the diluted EPS is 70 cents, and that's versus 88 cents. Year over year. Taking a look at the 12 months ended, we'll go through this really quick, but I think it's more important for a company like this, a growth company, to look over at the year over year basis. Revenue, we saw about 200 million, over 200 million, well, not quite, increase in revenue year over year. Again, the total cost of revenue was 670 million versus 537 million. A lot of the operating expenses were pretty much in line, but again, that general and administrative expense there it was cut quite a bit. We have seen selling and marketing increase a bit, but I would expect that with the ramp of these new products. Surprisingly enough, though, research and development, we're going backwards up here, it was pretty flat considering the amount of innovation that they've been doing. And running down to the bottom line, because you can take a look at the rest of it if you'd like yourself, net income was not too much different, about 85 million versus 87.9 million, and that was something that obviously investors have been focusing on and why the stock came down. Now we're taking a look at diluted income per share, net income per share, and it was $2.97 this year versus $3.07 last year. The next figure they give here is stock-based compensation. I won't go into this, but they did mention that they're trying to cut back stock compensation given the fact that there's some challenging times ahead. So I do appreciate that, and that's reflected here. Taking a look at their balance sheet here, again, like I said, they had $239 million in cash. Keep in mind, like I said, you got to take into account short-term investments as well as long-term investments, but it doesn't look like they have any here. But a pretty healthy looking balance sheet. This next section here I thought was something that was very interesting. You could look for the supplementary information here. It's giving revenue by the geography, domestic and international. Below it has units shipped and revenue by product category. And it goes for the 3 months ended for March 30th, 2019, June 29th, 2019, September 28th, 2019, and of course, the last quarter here, December 28th, 2019, and for the 12 months ended. I love seeing this domestic growth. As you can see, we've come to $247 million in domestic. Looking down the line there, you can see that's some significant growth. In terms of international, we've seen some phenomenal growth as well. And, that has shown that, there's some real significant growth in terms of the revenue by geography. Again, following in line here for the vacuum, this is units shipped. As of last quarter, we're, 1,730, which of course is 1.7 million units. But I'll just, refer to these in the numbers shown here. Mopping, we saw 179,000. But what I'm more interested in looking at here than giving the specific numbers is seeing the growth that appears to be occurring, over a relatively short period of time. Likewise, down below here, we see revenue by product category. I'm pretty focused on the vacuum. We've seen this significantly increase quarter after quarter here. And down below, they're actually showing the average gross selling prices for the robot units. And this is steadily been increasing, and we've definitely seen that reflected in the price of the vacuums. But just like Apple's iPhones, we like to see that increase. They're also including the tariff costs in here if you guys want to take a look at that. And just take a pause your screen because there's a lot of really useful information here. If you want to compare it to last year, they actually do the same thing, which is very nice to have this transparency for the year of 2018, so you could compare those. It's a little bit confusing the way that they laid it out because you'd have to look at the 2018 year over year and then basically look up at the 2019. But the gist of the story is that we've seen some pretty great growth that's reflected in the basic numbers that I gave you at the beginning, and I think bodes well for iRobot's future. And if you go down further here, they're showing their explanation of non-GAAP measures. I get where they're coming from, but I usually don't like to look at non-GAAP, especially that we don't know what's going to happen with tariffs going forward. So I'm definitely not going to include that. Again, going into some of these valuation measures that I mentioned in my last video, they're still really reasonable if you ask me. We're seeing a trailing PE of 19.47, forward PE of about 30. This is historically really cheap for this company, and a price to sales about 1.35, which is really quite reasonable. Again, this balance sheet view here gives you a little bit better idea. Again, $256 million in cash and total debt of $54.93 million. So that to me is a pretty ratio going forward that I'm pretty comfortable with. And they're growing their cash balance, and they've mentioned that that's something that they would like to do going forward. So all in all, really fantastic results as far as I'm concerned. There's really nothing bad in there. So before I actually went through it, I thought that maybe we were seeing something in the numbers that weren't so great, the way that the stock responded. But I think it's just a lot to digest, especially the way that they presented it. Like I said, you guys can go back and pause it and take a look at those numbers if you want. I didn't feel like going through every single one and comparing the percentage year over year, but really, really great numbers and a lot of great information in here as well. So I'm still going to hold my position, of course. See how things go forward. We've already seen China, pull back a lot of the tariffs. The tonality is, calmed down a lot, but hard to say what's going to happen going forward. But great quarter, great stock as far as I'm concerned, and I'll be very interested to see what happens going forward. So as always, guys, like that, hit that like button, leave a comment down below. I'd love to know what you guys think. Subscribe, it really helps out the channel. And I will see you guys in the next one.